going on, everybody? Welcome into the 10K to $2 million funding challenge. It is Thursday, October 12th at 7 a.m. in New York time. And we're back on the charts, sitting in the tree stand. Hunting trophy buck A+ setups today. Welcome and hope you had a good day yesterday. Hope you're having a great day today. It is good morning to everyone here in North America. Good afternoon to everyone over in Europe and Africa, and good evening to everyone over in Asia, Australia, and everyone on the other side of the world. Hope you guys have had a great day, good evening, whatever it is you might be finding yourself doing. We're going to be here for the next couple of hours watching candles, print, talking through analysis, mindset, psychology, and anything else that might happen to just strangely pop up in the chat. But we're here every day, and we're glad to be here. We are the stream sponsored by our partners, Bespoke Funding Program, the best in the business for finding funding for your trading career. No one's doing it better right now, in my opinion, and happy to be sponsored by them. And I would encourage you to go check out a challenge with them. Purchase a challenge, use that code Venator. You'll get 15% off any challenge and an 85% lifetime profit split from that challenge. So take advantage of that. And while you're here, go ahead and hit that like button if you're just popping in. We can get those likes up right away. That would be great. We've got CPI news today, so there will be no trading, no pushing of buttons of any kind until CPI hits. It's for non-dollar pairs like pound yen or pound Aussie. We might still be able to find an opportunity to get involved, but we will just wait and see on that. We will wait and see. But for dollar pairs, definitely, no trading until after CPI comes out at, I believe it's 8:30. Where's my calendar? Yep, 8:30 we get core CPI month over month. We get CPI year over year. And unemployment claims also drop at 8:30 today. So big news day today. They're expecting a slight drop in the CPI numbers. Not much really at all, like a 1/10 of a percentage point basically is what they're looking for, that it's dropping. Out here in reality, I'm not sure what numbers they're using, but inflation is not going down. I think everyone living out here in the real world recognizes that inflation is at bare minimum holding steady, and if worst case scenario and more likely, it's still going up based on just real world living. Inflation is not going down. Everything is more expensive and is continuing to become more expensive. So it's just, it doesn't matter what the numbers say. The market's going to react to what the numbers say, not to what everyone is actually living and experiencing on a daily basis. Because the government doesn't lie to us. The government never, ever, ever tells us untruths. It is never like they are always telling us exactly the God's honest truth in every situation. You can 100% guarantee the government does not lie to you. I'm not a good winker. I need to work on my winks. We're not here to talk about government. We're here to talk about trading. We're here to talk about getting funded. We're here to talk about getting payouts. That's what we're here to talk about. So we were looking for a trade yesterday on the pound Aussie dollar trade, and it was right here. So we had this run of sell side liquidity right here. We had displacement up, and we were hoping price would come back down off of this. I believe it was this candle right down into this fair value gap, and we never got it. So instead, it just ran up into our higher time frame point of interest, draw on liquidity, filling in this fair value gap. And you can see now it's trading up above. I would still think we have a little bit higher prices. We do have engineered liquidity to the sell side, nice relative equal lows, very clear buy side targets, still higher. I cannot talk, from highs of the week still coming into play here. So potential setups. Right now, it's just moving sideways. We're going to need to see some displacement. Same for pound yen. We have closed back up above this fair value gap that has acted as support and resistance multiple times, and now currently displaced through that aggressively yesterday. Price has come back down, touched the top of that fair value gap, which is now an inverted fair value gap again. And we've taken out yesterday's high, pulling back a little bit. So it wouldn't surprise me if we still find some pound strength in those two pairs. So we'll wait and see. Dollar has the weekly fair value gap that we identified on Monday right here. We're trading inside of it currently. We did wick down below. We'll see over today and tomorrow whether it wants to push down. There's another small fair value gap right below us. Again, we're very bullish. We are expecting some kind of pullback. The question is, where does this pullback want to reach to? We'll see. Very cautious. Only taking A+ setups here, so... Dollar currently took out Wednesday's low here, and we've displaced higher through the London session, and we've consolidated, and now we're pushing up higher as we enter into the 7 o'clock hour here. So if you're looking, we've been in this downtrend pretty much all week long on the hourly time frame. Popped up. And then this whole week, we've just been inching down. Took out last week's low. So now we've just taken out some sell side. We're starting to displace higher. We've taken out the Wednesday opening gap. Got a little bit of some sell side imbalances up here. May want to reach up into inside this order block. Dollar could find some resistance here, so we'll watch that. But this fair value gap here and the volume imbalance directly above it, I would anticipate with the closure out of that on Tuesday, a retest of it on Wednesday. If we get any kind of movement back up into that area, into that box level there, this is a daily fair value gap from way over here. Could anticipate a lower high somewhere up in here, and then a drop back down and aim for some more sell side liquidity, which would mean bullish opportunities for both the pound and the euro. Overnight, London took out yesterday's high. We left a breaker, not a very clean breaker. This would have been a cleaner breaker, but with the fair value gaps, but price never came back up into it. Left a lot of clean highs here, fair value gaps, and now we're trading lower. This would have been the breaker you probably would have been looking for. Those Asian lows, they get taken out now. So London took out yesterday's high, traded back through, took out Asian lows. Now we're trading lower. So we'll just see no trading until after all of this news comes out at 8:30. No trading. All right. What else can we look at? Oh, oil has come back down from its weak gap up after the weekend war started in the Middle East between Israel and Palestine and the Gaza Strip. We had this gap up and has now on Thursday traded back down, completely filled in that gap. Now we're right back in, right back in the middle of that opening gap range there. So interesting how that quickly, just within a matter of days, has taken that and filled it back in. So we'll watch that. John's always interested in oil, so always throw that up for John. All right, Cisco, welcome in. Good to see you. Kamatang, Mr. Alfie, Red Ezekiel, Alpha Bridge, Shadow Trades, Beeswax, Mr. Alpha Bridge. Mr. Alfie says, Alpha Bridge, thanks for the strategy update in Discord. Good to see other ways of working. I did see, thank you, Alpha Bridge, for posting your chat strats in there. Those are available for all of you to be posting your strategies and there to help each other out. We're not here to convince you how to use any one specific strategy. I'm really here to teach you how to and model for you how to stay disciplined and to your strategy. There are many, many good options. There are many, many profitable trading strategies. There is not just one set strategy that you need that is the holy grail of trading. You need to find the one that suits you, that suits your personality, that suits your risk profile, that suits your temperament, that's easy for you to identify, that's easy for you to stay committed to. That is the biggest part of trading, is just staying committed to your strategy, knowing it inside and out, understanding exactly what it looks like on the charts when you see it, and then executing without hesitation when it's present. And then risk management. That's what we're here to do. It's just model all of that for you. So put your chat strats in the Discord channel. Go check them out. Let's help each other out. Let's grow together. Cisco, the government are super responsible. I haven't met a more responsible organization of people, Cisco. I don't know what you're talking about, man. They are the most responsible with our money, with our resources. They are uber responsible. They don't waste anything. They are the most relentlessly, aggressively conservative stewards of our time and our money and our resources. They don't waste a thing, Beeswax. I agree. What's up, Buffett? Welcome in, man. Saeem, good evening. Alpha Bridge. Everything works or could work. The real holy grail is to grind itself. That's it. John says oil is acting weird based on the news. Just got to read the chart and use technical analysis. That's the key, my friend. That is the correct answer. Trade what you see in front of you. Trade the analysis that's on your chart. Sling says, I got schooled by the market today. Had 2 trades. Both were TP hit, but one I didn't get in because I got scared. And another one, I got out early and took a 0.5% loss. Saeem, why are you doing that? Why are you doing that? Why are you operating out of fear and not out of executing your system? There is nothing to be afraid of. Just trade your analysis. Lower the risk amount until you're comfortable just taking every trade that you see that fits your plan. If you're scared, it may be because you're risking too much. if you're risking 2% like I am, that's big boy trading risk percentage. If it's causing you anxiety and fear and panic when you're in those trades, you may be risking too much. You need to be risking an amount consistently on every single trade that when you're in the trade, you're not even thinking about it anymore. Yeah, that's a good piece of advice from Cisco is see the trade, take the trade, close the chart. That is 100% some of the best advice I was ever given. It helped me tremendously to manage my FOMO, my greed, my anxiety is see the trade, take the trade, close the chart, and then just go do something else to entertain your mind. Don't sit there and watch it. Just close the chart. This mistake's really holding me back. I am risking 1%. I need to calm down. I lower it to 0.5%. Lower it to 0.5%. I mean, there is a number that you're going to risk that you're going to stop caring about the outcome of the trade. And even then, you've got to get past the point of even caring about the specific outcome of any one trade. You've got to keep thinking in terms of the long-term focus. What's going to come in 2 months, in 3 months? How many trades do you have to take between now and then? And if your edge is in the market, and you deviate from your plan, you have just completely taken away your edge. You need to take every trade that fits your strategy. You have to take every trade, and you have to let the data and the probabilities and the statistics build up. And that means take the trade, close the chart, let whatever happens, happens. When you're back testing, you're not sitting there sweating. You're not sitting there, oh my God, should I close the trade? Should I open the trade? Should I take the profit? Should I move the stop loss? Should I cut it early? You're just clicking next candle, next candle, next candle, next candle. And you're not even thinking about it. Oh, took a loss. Okay. Oh, there's my trade. Enter. Next candle, next candle. Oh, took a win. Cool. And that's the danger. That's why I'm not a huge fan of back testing, and I'm always preaching live test, forward test in a live market, because you cannot replicate the psychology and mindset that you have to have when you're in these positions, when you're identifying these setups in real time. That is where the hardest part is for most people, the mindset. These mental hurdles and these mental obstacles that keep coming up over and over again. So getting a nice reaction here on Pound Aussie and Pound Yen. We have taken out some sell side liquidity. Reach down. Where might I be looking to identify a breaker? Where did this run on liquidity begin? Well, any of these up close candles, we'll see. The first one being here. I mean, I guess you could say here. That's not a great. I would say here is the liquidity level you're looking at to get run. That's where your attention goes, is right here, these key levels. So this candle here. And then, of course, depending on this candle here. And where might we be looking and targeting? Where is the next level of liquidity? Obviously, you've got this 4-hour swing level, and I would think up here into these levels. So it's what you could be looking at on pound yen, but we'll wait and see. I would not. I mean, technically, this is a breaker. This up close candle right here. This up close candle runs its old low, takes out liquidity. We're getting displacement through it, but this is the liquidity levels that you would have been targeting here from this level. So one of these two up close candles could be used as a breaker. If we jump up to the 30-minute time frame, it would be up here. Here are the up close candles that you would be using as the run of liquidity, and then if you get displacement away. So all right, let's look at pound Aussie. What's going on over here? Not a good clean run of liquidity in here to really say we tapped into. We did take out a little bit here, came back up. We took out some liquidity there. So we took out that liquidity. We didn't take out the previous day's Asian lows there. We are displacing higher. Let's see. Let's see. Let's just watch that. Probably just going to chill. We've got about an hour until CPI comes out. Might as well just continue to do nothing. Addiction is real. AC Mirage loaded on Xbox again. I don't know how is this possible. X knows me so well. I think there's a secret AI. Kamatang, the pressure. The pressure to trade, the pressure to succeed, the pressure to perform, the pressure to make profits. It's all self-engineered. No one's putting this pressure on you. You don't have a boss. You're the one creating the pressure. Any pressure you feel is completely self-induced. UJ just in a consolidation period for the last week and a half here. Obviously, we've been in a bullish uptrend. Depending on what happens today, UJ pairs, it's just there's liquidity on both sides. We've engineered liquidity on both sides here on UJ. So, I need to see more price action here. I need to see some structure develop before we go into considering a UJ trade. Ace, welcome in. How's the challenge going, man? 1 week in. Almost. Hope things are going well for you. But glad you're back on the stream. Oh, goodness. Still testing the waters. Cool. There's no rush. Here we go. You really got to hand it to short people because they usually can't reach it anyway. Well played, Mr. Alfie. Well played. Red Ezekiel says, yep, this is a 3 to 5 trillion daily volume market. So even if you trade a million, the market doesn't see you. And we're on simulated funds. All 100% correct. Our markets, our orders are not going into a live market. You're not trading real money. You're not trading against real traders. You're not trading against real central banks. All you're doing is seeing if you can anticipate where the market is going to move next on a simulated demo paper trading account. That's it. That's it. And that really did help me. That's a mindset, a mind trick that I played on myself many times, is just keep reminding myself that this isn't real. Especially until you're funded. There's really no reason to just do anything other than just paper trade. Just like you would on a back test, just paper trade. Take the trades when you see them. Yes, I know that you're paying money to audition for this company, but it's still just an audition on a fake account. There's nothing real happening on any of these accounts. All you're doing is trying to prove to a funding company that you can consistently manage your trading plan. That's all you're trying to do right now. Is prove to them that you can consistently manage your trading plan. Oh. In the world of Houston sports teams, Houston, again, for the 7th year in a row, is moving on to the American League Championship Series to face the Texas Rangers. So, for the 7th year in a row, which is quite historic, by the way, only one other team, the Atlanta Braves, the Atlanta Braves from the 1990s, with when they had Chipper Jones and Tom Glavine and Greg Maddux and all these guys. They're the only other team that have been to more than 7 consecutive straight American League Championship Series. For 7 years, almost an entire decade, the Houston Astros have made it to the American League Championship Series. So that will begin in the next couple of days. Super excited about that. We closed out the series last night against the Minnesota Twins in their home park, which is even more fun to do. So moving on. And it'll be a fun series. We actually won the season series with the Rangers. We actually kicked their asses. But in the playoffs, they've been on an incredible hot streak. Here in the playoffs, they've been absolutely dominant. The Texas Rangers have. So it's going to be a good series. Both are good clubs. It's a Dallas versus Houston rivalry, so that's cool. Keep it in the state, and good bragging rights to be had here. Texas has been spending bagillions of dollars to try to field a team to compete with the Astros, and it's now starting to pay off a little bit. They're actually going to be competitive. So, but they had to spend so much money to get there. So we'll see if it pays off. Last year, the Yankees fans and the Red Sox fans were all chanting. Every time they would win a series, they would start chanting, "We want Houston." And it never worked out well for them. And after the Rangers won and swept the Orioles, the Baltimore Orioles, in their division series, Guess what? Everyone in Dallas started doing. We want Houston. It doesn't work out typically too well for people who keep chanting that, but happy to hear them do that. It makes my heart smile. Hard pill to swallow. Baseball needs a salary cap. Yeah, baseball is uncapped, so you can just spend your way. Big market teams can just keep tapping into those deep pockets and always field competitive teams, while these smaller market teams, not only should they have a salary cap, they should have a minimum salary cap. Like I think football and basketball both have minimums that you have to spend. And right now, baseball is you're either spending nothing because you're trying to tank and lose and just build up draft capital. And so there's teams like the A's and sometimes the Royals and other clubs that literally will have a 10 or $20 million payroll. And there's clubs like the Yankees, the Rangers, the Dodgers, the Red Sox that will have literally a $300 million payroll. And it's not a good product that you're putting on the field when you allow your teams to do that. So I'm not in disagreement with you, John. A salary cap and a minimum salary floor would be beneficial for the sport. It would just bring in more equity and make it more competitive across the entire league for sure, I think. A salary cap and a salary floor. Did I say it backwards? So when the Royals won the World Series a few years ago, extremely impressive. Oh, for sure. Anytime one of those teams, when the Astros won their first World Series in 2017, they were their salary cap I think was half of the league average, whatever it was. I mean, it was not huge. When they won in 2017, it was homegrown, but they also tanked and they had 100 lost seasons for like 4 or 5 years in a row. But they built up from the inside. Altuve, Bregman, Correa, Springer, all these guys, Tucker, Alvarez. Well, Alvarez was a trade, but a minor league draft trade. All of these guys were built up. They were not bought and paid for. There was only a couple of bought and paid for guys on the team when they won their first World Series 7 years ago. Now they've had to start paying their guys because obviously these guys' contracts are coming due. They've produced. They're obviously high caliber players. So the budget has swelled in recent years. But it's still not anywhere near like the Dodgers, the Rangers, the Red Sox, the Yankees. Not anywhere close to that. And we're still kicking their asses. Simon says, am I the only who feels Price is literally copying yesterday's price action on GU? It looks very similar. Very similar days. Choppy, grab some liquidity, run higher. It's very, very similar. Oops, go back. Let's see. Pound Aussie here. Drop down into the 10. What's the 5 look like? Right in there. Potential. Right inside that order block too. I would put my stop back up under here. Yeah, I don't know if I really want to take a trade. We're just under an hour away from CPI news, and I'm not sure how much these cross pairs are going to want to consolidate ahead of that news, if at all. So I'm not sure if I really want to get into a trade here on Pound Aussie. But the setup's there. It's not the only downside is you do have a lot of clean relative equal lows under here. Obvious consolidation. Even though you've got some higher time frame draws of liquidity above. You have CPI about to hit. I don't have the data to know how these cross pairs react on days when dollar news, big dollar news is here. Does it affect these cross pairs the same way? So I don't know. And so that's why I'm kind of hesitant to set a limit order here. So I think what I'm going to do, because I'm unsure, is just not do anything and just use this as a data point and reference point as a demo trade that I'm not going to take, but a demo trade in my head just as a data point. But we'll see how that plays out. First time you said minimum salary cap. Oh, a minimum. Second time you said floor. I got you. Yeah. It's still early, man. You got to forgive me. My brain isn't working 100% just yet with vocabulary words. I don't know about them, but I wouldn't consider the Astros a mid-market team nowadays. No, the Astros have definitely pushed themselves into a... they're not a large market. I take that back. Houston is obviously a large market. But in the business world and in the MLB's eyes of the markets that they're most interested in, Houston is not at the top of that list. San Francisco, Los Angeles, Chicago, New York, Boston, those are the teams that MLB is interested in pushing. Dallas, the Texas Rangers. Houston is, while it is a major market, it's obviously larger than Kansas City and, these places, but it's not. It's still. I think we're still viewed as kind of second tier, higher market. So there's like the premium level markets. Houston's, I think, in that second level underneath that. Cisco says usually affects spreads, but doesn't usually cause liquidity grabs. Although, as you know, anything can happen. Yeah, that's why I've never really traded these cross pairs much. But the breaker block is a breaker block, and they all work. So you've had a run of liquidity. You did take out some swing levels. You took out that swing level. You took out that swing level. So then you chopped. Now you're getting displacement. So I just don't understand the correlation here on high impact news days. So I'm just going to watch. How it reacts to this breaker fair value gap setup. I'm just going to watch. we will use it as a data point. That's all. Oh, you know what I need? I need some teakwood oak in my life. That's what I need. Oh, yeah. There we go. That's what we needed. Oh, my God. That smells so good. Can you explain why a breaker block works? It's an order flow concept of liquidity. So if the price is going to move from, well, let's just go back and look at yesterday's, right? I think this was the breaker we were trying to use right here. I can't remember. One of these, I can't remember where it was. It's just an order flow concept, and it's a price. How's the best way to explain this? Liquidity. Price wants to move from liquidity to liquidity. Okay. So if price is moving up and trending, right? We've all seen this. Price is moving up and trending, and price needs liquidity to move to the next level of liquidity. So often, for price to move higher, it needs to match up orders. And if you have a big money moving market maker type of a position trader, and he is expecting price or even wanting price to go higher, for it to get to that price, he can't just drop his massive 100 lot or 200 lot order in the market. All of those orders have to be met and matched. He's not just going to drop a 200 lot at 90572 and think that it's going to get filled. Where are all the orders that if he wants to buy, where are all of the selling orders? Well, they're going to be sell stops in the form of stop losses. People who are long have a stop loss, a sell limit order or a sell stop order underneath levels. And so liquidity builds up underneath these levels. Okay. So price has paused at each of these levels. So a breaker block is a failed order block. An order block is an area wherein the price reverses and begins to head in the opposite direction. So if you've got an up close candle here, and then you see price come back down and take out a liquidity level, price has now matched up all the orders it needs to move price higher. So once it grabs this level of liquidity, and then immediately afterwards, you see an aggressive move higher right after it grabs liquidity. This move higher is called displacement. And often when you have displacement, price has moved so far, so fast, it has provided what's called, in smart money concepts, ICT language, or others, not even just ICT, inefficient price delivery. It has not offered, it's only offered one side of the market, and that's inefficient price delivery. So it needs to give other people a chance to get into the market. It needs to rebalance this price. It moved too quickly, too far, too fast. And so the price theory is that it needs to come back and re-deliver price, rebalance this big move before it continues up higher. And so where is it likely to rebalance? Well, it's going to reach for fair value gaps, and it's going to reach for failed order blocks. So what's a failed order block? Once price breaks through this level, there is a bearish order block created right here. Meaning there is a up close candle and then there is a down close candle that breaks through this up close candle right here. So when it breaks through, and now that we've created and taken out this liquidity, this is a bearish order block right here. Meaning if price is going to reverse and continue down from here, it's going to do it at this bearish order block right here. It should respect bearish order flow. So as it's grabbed liquidity, we've had a change in structure. We've moved below this old swing level. So when price does retrace and come back up, it should respect this order block right here as a bearish order block and push price lower. But what happens instead is you get this aggressive move through. This becomes a failed bearish order block. So as price now comes back down into it, we're going to be looking for price to find support at this failed bearish order block, or in ICT terms, a breaker. This order block was broken. It did not continue as it came back up to. We had a change of structure. Market has changed. But as price came back up to it, this order block was broken. So it becomes a broken block or a breaker block. And now as price aggressively violates it, that's the displacement you're looking for, that aggressive violation of that order block. And you're looking for it to violate the order block that began the run on this liquidity level. So here's your liquidity. Here's the order block that initiated that run on liquidity. And then after that liquidity is taken, you see aggressive price action that violates that order block. It breaks that order block. As it's broken, you're going to anticipate a return to rebalance this aggressive price move. And you're looking for it to return to that order block, this old broken order block, and some type of fair value gap, optimal trade entry, another bullish, maybe on a lower time frame, a bullish order block in here somewhere. But that's why breaker blocks work, is that they are failed counter trend trades, basically. And you get this displacement, you get inefficient price action. Price wants to come back. It's going to find support at that old level that began the run on liquidity. That is a very basic general understanding of why breaker blocks work. Anytime a PD array is violated, and it's not just breaker blocks, it's fair value gaps, it's all kinds of stuff. Anytime a PD array is violated, when price returns to it, it will often act as support or resistance. So if an order block is violated, when price returns to that violation, it's a retest to send price as support and resistance. If a fair value gap is violated, it is often retested on the opposite side to provide support and resistance to the other side. A new day opening gap, a new week opening gap. There's any time a PD array should be respected and it's not, after that disrespect or that violation has occurred, you can look to take those trades against that position. Hope that was clear as mud. That's because the algorithm that ICT wrote made it work that way. That's right. Have you watched all the core content 12 months? Nope, I have not. Instead of looking for failed order blocks, why can't we look for successful order blocks? Is there a name for a failed breaker block, or is that a triple stamp on a double stamp? You can't triple stamp a double stamp. You can trade order blocks. In a trend, you can just trade order blocks. There's a lot of people that just trade order blocks. So I would suggest when you're trading order blocks, in fact, the other strategy that I use where it's limit orders into the London session is often just built on order blocks, not breaker blocks. So anytime price comes back down into an up close candle area, etc., you're looking for an opportunity to take a trade and for the trend to continue off of that order block. Successful breaker is kind of my strategy. I see if the breaker is respected, then I get in. I mean, they're all valid strategies to work with for sure, 100%. Again, these are all just concepts, theoretical concepts of how price moves. The ebb and flow of the market. It does what it's going to do. The market isn't sitting here alive thinking, I just created an order block, or I just violated an order block, or I just created a fair value gap. The market is not thinking like that. I do believe the market is, in a free market, it's there to provide efficient price delivery. And I do believe that market makers are going to allow other people to participate when price does move so aggressively in one direction. It's going to need to return and rebalance the books, so to speak, and provide efficient price delivery. I do think that is accurate. But it doesn't know what an order block is. It's just trading. And we just use it as ways to determine where price should return to and then move away from. A failed breaker. Let's see. I think he calls that seek and destroy profile, basically. When price isn't respecting anything, it's basically just taking out sell side, taking out buy side. It's created breakers, and then it immediately goes back, takes out more sell side, and then it's kind of just doing this expansion thing in the market where it's, oh, grab sell side. Oh, no, go up here, grab buy side. Oh, no, go up here. It's called, he calls it, I think, a seek and destroy profile, where it's just basically chopping, creating more liquidity, trapping buyers, trapping sellers, trapping buyers, just moving sideways into the consolidation. Accumulation, manipulation, distribution. It's, again, he's got 1,000 different ways to describe it, and I'm not telling you should subscribe to every bit of ICT vocabulary. The only thing I have to say about what I believe about ICT is that his like the way he describes how price moves basically from liquidity area to liquidity area. You want to call it supply demand. You want to call it support and resistance. Where are the orders resting in the marketplace? That's where the market is going to move to and away from. So the way he begins to describe that is been the most helpful for me in understanding why price moves in and out of where it wants to move to. And it's helped me frame up a trading strategy or strategies that have a fairly consistent edge in the market. I'm not an ICT worshiper. mode 1 and mode 2. Yep. I mean, there's all kinds of way of thinking about it, but accumulation, mode 1, sideways market. There's all kinds of ways to say prices, whatever it's doing. And then now it's trending, mode 2, Elliott wave, Wyckoff, up thrust. I mean, there's so many different ways to look at this. This is why I'm not trying to convince any of you to trade the way I trade or use the language I use. Use the strategy that makes sense to you and that you can easily identify on the charts. That's the strategy you should use. Yeah, he's a salesman. He's like Patrick Wieland and like Raja Banks and a lot of these very popular traders, online traders. They are salesmen and entertainers as much as they are just traders. They're building a brand and don't think that they're not doing anything else besides that. And they all have their own unique ways to do so. And I'm not faulting them for that. That's not me judging them. That's or saying they shouldn't do that. I'm saying it's a free world, man, and they're capitalizing on their personalities and their skill sets to the best of their ability. And they're making a hell of a lot of money and doing both at the same time. So I think the more the merrier, man. If you can figure out a way to monetize your personal brand, and if that brand revolves around saying crazy wild things and entertaining people and gathering an audience and making them entertained, and you can monetize that, more power to you. More power to you. Pound Aussie currently reacting nicely off of that breaker fair value gap. Completely rebalanced that fair value gap and is now rejecting higher. Coming into the close of this first hour candle here. We got about 30 more minutes till CPI comes out. And then we'll get to watch the fireworks. Beautiful little return off of that breaker. The reason I chose, if you might be wondering, the reason I chose to highlight this breaker instead of this breaker. This is the order block that was respected this entire time. You can see these up close candles, once they were traded through, became a bearish order block. Price took out a low and changed structure right here after this. And then it came back, it respected this order block. Came back, respected this order block. Came back, respected this order block. Once you get a violation of that order block here with displacement aggressively through, leaving behind a fair value gap, as price returns to it, this order block that was now violated, it was broken, it becomes a breaker, and there's a beautiful fair value gap inside of that you can target as an entry on the retest of that breaker. You don't even need the fair value gap. You can just trade the breaker. You can trade the entry of the breaker, the 50% of the breaker, an OTE of the breaker, whatever. There's all kinds. I use the fair value gap as the entry method for my breaker block setup. So once an order block here, the one that ran liquidity, once it's violated, that's the one that you want to get a retest on. currently working nearly a 1-to-1. If you were in that trade, you would be nearly to 1-to-1 already. This higher time frame draw on liquidity and daily fair value gap. When price gets up above these highs, I'd probably look to move to break even after it ran these highs up here. But I think price is probably going to reach up into that level at some point over the next 48 hours, potentially. Internal concerning traits. John is not a fan of ICT. If anyone was wondering, John, not an ICT guy. John, where did you learn to trade? What education did you latch onto and kind of like inform how you view your analysis and entries and such? Now, John is the number one fan of the Venator fan club, I think. No, not everybody uses the ICT stuff in here. It's not necessary. I think it could help just in the basic overall understanding of what I'm doing, at least to be familiar with it, but you don't have to use it. I don't think John is worried if ICT decides to block him. Online trading. Oh, I believe you talked about that before. Supply and demand. I remember we looked at that before a few months ago on the stream. I think you talked about that and I looked it up. I remember that now. There are supply and demand is a very valid strategy. It's very good. Again, ultimately, it's not about the strategy really. It's about the trader trading the strategy, the identification of your system on the live charts and your mindset while doing that. That really makes the ultimate difference in profitability. I don't think there's very many people. John, you do say ICT a lot. A reclaimed order block. Order block, breaker block, reclaimed order block. I've probably heard that before. Yep. I don't say ICT more than you. There's no way. If I say ICT, it's because you brought up the comment and make me say it. I hardly ever bring ICT up. ICT concepts. I might say ICT concepts when people ask me what trading strategy I trade, or if people ask me. It's really more about just the idea of liquidity to liquidity. ICT, 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 ICT. Let's say it. Everybody say it with me. ICT. Let's make John feel so happy about being here today. I will agree others do mention him sometimes, but they generally ask if something is an ICT concept and generally comes from newer viewers. It's fine, man. I'm just giving you a hard time, brother. Just giving you a hard time. I am not an ICT worshiper. I am not an ICT worshiper, but I'll give credit where credit is due in my understanding and growth as a trader. Absolutely. P.T. Barnum is the Barnum and Bailey Circus. He's a famous circus ringleader, the ringleader master, circus master. They go around and they put on circuses with clowns and acrobats and zoo animals. It's just a big circus. So P.T. Barnum is the Barnum and Bailey Circus. It is definitely an American pop culture reference that our friends on the other side of the world may not register with. The Barnum and Bailey Circus. I actually have been to a Barnum and Bailey Circus. It wasn't until recently that they stopped traveling. They would tour America. They would set up shop in arenas and coliseums and stadiums for like a week at a time. They would just travel around the United States and they would perform and hold a circus. People would pay and come into the big tent and watch elephants climb on boxes and watch trapeze artists and clowns and be entertained by the spectacle. Andy says, I used to do supply and demand too. It was definitely a good beginner strat before starting ICT. They're all good strats, quite honestly. I've said that over and over. That's one thing that I have consistently said. They're all good strategies. It's your execution of that strategy that matters the most. Did you reply to messages on my Discord? Honestly, I have not been on Discord this week much. I haven't really been on social medias, if you've noticed at all. We've been packing up. We're moving tomorrow. In fact, when we get off the stream today, I've got a lot of last minute things to do before we start getting the truck. So if I've not replied to any of your messages, I'm sorry. It is not a personal. I just haven't had time. We've had real life stuff going on with my other job, and we're trying to get everything packed up out of this townhome so we can move tomorrow and Saturday, which is a reminder. Hopefully we're able to stream on Monday. If hopefully the internet is all working correctly at our new place. We're staying in the same community complex. We're just moving to the back of it away from the road noise. So if I haven't responded to your message, I will. I just haven't had a lot of time to get on Discord or Twitter this week. So all right, got about 20 more minutes till CPI. If you're in a position, I would highly recommend you either close the position or move to break even. CPI is just, it's a news event that can gap significantly and move abruptly, and your stop losses will not be respected. Oh. I would want oil to, I mean, not oil. I would want pound Aussie to get up to this level before I move to break even on this trade. It's just above these old highs at the start of the week here. Make a new high of the week up there. So if it got up there, I would move to break even. Auction market theory as well. I don't think I have heard that term before. I've heard it did you mention that in the chat here the other day? I might have heard it. I know that I've just recently seen that term, and I can't remember where, if it was here in the chat, maybe from you, John, maybe from somebody else. But I have not done any investigation into auction market theory. I remember I've seen that phrase recently, and I couldn't remember. It must have been you. No, I'm not, Owen. This I did not take this trade on pound Aussie. Just as a demo and as a data point, I'm not in the trade. Mostly because CPI is coming up, and I don't have the data to know how these cross pairs, non-dollar pairs, react from dollar-related news like the CPI. So I did not take this trade. It was a valid breaker setup, but I'm not in that. We're just watching it as a point of reference. I'm standing to the side until after CPI comes out. If I had the data and it showed that non-dollar pairs aren't affected by news releases like CPI, then I'd probably have taken this trade. But I don't trade GA only in the last couple of weeks since we've been watching it on the chat pair. So because I don't have that information, I'm just using this as a reference point. One more 15-minute candle. And then we can start looking and hunting for entries there. AMT. They are affected, but at a secondary level. Say GU and AU both have a big spike. Which one spikes more moves? Makes sense. I mean, I would anticipate any moves for the dollar are going to affect the other pairs. It's just like how. I'm not certain I understand those correlations like I understand the ones that I have the data for. Makes sense. I mean, I'm sure there's going to be some type of reaction on every pair when the dollar CPI information comes out. But it may not be the same aggressive move that you're going to see on like euro dollar or pound dollar. I need to message a couple of my friends this morning. Owen says, I've been able to read EU so well this week. 2 swerves and a break even. Just can't get the entries right one of those weeks. I feel your pain, man. You can be accurate in your direction and overall bias and just not get the entry you want to participate. And that can be very, very frustrating and cause a lot of anxiety and just bitterness about the situation. But you gotta stay strong. It is one of those weeks. It's gonna happen. It could happen for the next couple weeks. It's happened to me for the last 2 months where I've gotten swerved on so many good setups that we just didn't get tapped into our entries. So it happens, man. In that case, Owen, you are truly following Venator's example. I'm rubbing off on you. But listen, man, we might have 3 months of what's happened, and then we might have these last 3 months could be the best 3 months of trading that we've ever had. We're just going to stick to the plan and let the numbers play out. That's all we're going to do. You could go into the rest of October, November, and December and just get on a 85% win rate. Yeah, Mr. Alfie had one. I gotta scroll back up and find it. It's way back up there. Oh, here it is. You really gotta hand it to short people, because they usually can't reach it anyway. Yeah, there's some SMT on the EU and GU. I look more for SMT between DXY and EU than I do necessarily EU and GU. My August and September was next level, so I'm finding it difficult now that it's slowed down, but I'm glad I haven't been rushing to push the button without a clean setup. That's it, man. You're gonna go several weeks where everything is clicking. When we started the stream, man, we were on a massive win streak and things were just clicking nonstop, passing accounts, passing phases, getting funded, starting new accounts. And then we ran into, as you've seen, the last several months where it's just been swerve, swerve, swerve. And then the entries we do get have been stop losses. So it's just part of it. Mr. Alfie says, I've invented a new golf ball that goes in the hole if it's within 4 inches of it. Note to self, don't keep them in your back pocket. Ouch. Ouch. What's up, Kishore? Gold is bullish today. I haven't even looked at gold. I don't know what gold's doing. If dollar's down, gold is up. If dollar's up, gold is down. That's the correlation. Owen, I'm just treating it as like a mid-semester exam from the market to make sure I make it to the other side. My 23 goal has been achieved, so I'm just laying the foundations for January now. That is the absolutely professional way to view what's happening. You're not going to have your setup every day. You're not going to have your best setups every month. There's going to be periods of drawdown and losing streaks. And the goal is to survive and just execute your trading plan consistently. Gold has been behaving this week, says Cisco. I have never known gold to behave. Whatever it's doing is lulling you into a false sense of security only to slap you across the face when you least expect it. John says, I had an overnight order on gold that reached the exact tick but didn't get in. It must have been people in front of me waiting in line. That sucks, man. I mean, you've seen me get swerved by pipettes before. I know that feeling. It's not fun. I saw a stat earlier, says Owen, that 0.01% of traders hold a funded account for longer than 6 months. Yeah, it is. It's not typical for most traders to hold funded accounts beyond a couple of payouts or a few months. It is very rare. I think the longest I've held my other account, let's see, it's in March. I'm 6 months on my other funded account right now. That's the longest. And it was in drawdown for about 2 months of that 6 months. All right, 5 more minutes here. I'm going to flop over here to euro dollar and pound dollar. We're going to watch that. And we're going to see how CPI comes out. It's going to be some volatility coming into the markets here, so it'll be fun to watch. 1 in 10,000 people. That's pretty insane. It just shows you that people that this is difficult business. It's a very difficult business. Ultimately, trading your own funded account, using funds from prop firms to fund your own account, is ultimately probably the ultimate solution, because you can't. The only way you lose that is if you blow the account. But there's no drawdown limits. You could go into 12% drawdown or 15% drawdown, and you still have the account. So that's, prop firms aren't perfect, but that's why if you can get a few consistent payouts, you should be building up, either purchasing new challenges or funding your own personal accounts with those profits. The emoji icon in the chat window can spam 5 different emojis like crazy. I'm not sure. But I like all the I like that everybody's trying to figure it out. It makes the I'm all for all the emojis flying up on the screen. It's entertaining. Getting a little pre-news movement here. Just a little anticipatory. Everybody trying to get either in or out of positions right before the news drops. Gamblers all in and all trying to take a position, jockeying for those last minute orders, convincing themselves of what's about to happen, even though they have no freaking clue. Doing a poll on data. Yeah, it's too close. You can just throw it in the chat. Is euro dollar going up or down, bullish or bearish? You guys can throw it in the chat. We won't do an official poll, but CPI is fun. It's entertaining. I mean, the movement that you get is absolutely insane. Owen says bullish. Euro dollar is going to be bullish. He thinks the dollar's going to crash here. See what kind of numbers the government wants to fudge this time. Oh, I'm not in disagreement with you. Just commentary on your stance is all. Bearish. I don't know what that is, Cisco. Is that a GIF? What is that? An image? Emoji? All right, here we go. About 20 more seconds. I don't think I've ever seen that before. Is that the loading icon? I don't know what that is, but it's cool. I've never seen anybody put that in the chat. Oh, it's an option as an emoji. Oh, cool. I didn't even realize that. All right, here we go. Coming out. I'm going to get a pop. Aggressively to the downside. Inflation was higher than anticipated year over year, is core inflation. Numbers are all basically in line, but inflation's still sticky. So that means dollar's going to find some strength there. Pound Aussie definitely hit your break-even level there. So you should be, if you were in that Pound Aussie trade, you should definitely be into that break-even level. But dollar finding quite a bit of bullish strength, at least currently off after the initial news. Dollar's finding strength there. Could be a nice liquidity grab. Who knows? Initial reaction to the downside, attack sell side. So it could move higher. That is definitely a potential there. It's just amazing to me that they think inflation is 3.7%. Core inflation is 4.1%. Like it's amazing to me they actually think everyone believes that that's what the inflation number is. As though the cost of living has only gone up 4% since last year. Come live out here, Joe. Come live out here in the real world, Jerome. It ain't 4%. It ain't 3.7%. It's more. Definitely more. So here on our weekly time frame here for DXY, we had identified our Tron liquidity that if price wanted to move higher, we would be interested to see how it responds off of this weekly fair value gap. And, you know, I don't know. Are we putting in a low of the week here on Thursday? Or is this just we taking out the liquidity, the sell side liquidity there? Are we going to put in a lower high next week to continue down, or is this going to attack last month's high? We'll see. I guess that's this month's high. We've already taken out last month's high. But quite the bullish reaction. So far, no indication in these first 15 minutes that it wants to pull back off of that initial reaction. We didn't get the spike up and the immediate drop. But we'll see. We'll let this 15-minute candle play out, and then we'll go from there. Definite sell side liquidity. It's still left to reach into. Andy predicting the drop. Feels inflation is like 50%. The cost of fuel for my car and my parents' electricity bill is gone. Oh yeah, it's not just you, man. Same here in the States. It's absolutely insane. The price differences right now on everything. It's way more than 4.7%, I can tell you that. It's the month-over-month inflation is 0.3%, I think, right now. But it's the year-over-year is the big one. Year-over-year, they're saying basically it's still at 3.7, meaning every year it's still going up 3 to 4% every year. That's still very high. It's still above. It's like double their target of 2%. Yeah, groceries are nuts here, man. It's the same everywhere. Everyone feels it. Every government in the world shut the entire world down for the pandemic, printed trillions of dollars, and that's why we are in the current situation we're in. And really, their only solution is to print more dollars. That would have been a break-even trade here on Pound Aussie if you were in it, but not a bad take off of a breaker and a fair value gap. It did definitely get to that. You might have been able to hit TP if you had a more aggressive stop loss and put it below the candle that created the fair value gap, but that was valid. But that would have been a break even. I'm going to go ahead and take that off as that's no longer information that we need. Oh, golf and watch Formula One. I used to play golf a lot. I do not watch Formula One. See, Siam, have a great day. Catch you tomorrow. And yes, Cisco, thank you for that. Hit that like button, everyone. I'd appreciate it. We chilling. We just chilling. Oh. Spamming emojis is my new purpose. I don't know that I mean I'm glad that you enjoy doing that. I'm not sure if that has an effect on the algorithm or not for interaction with the live stream. The more people who spam emojis, maybe it pushes it out. Like, hey, look at all these people that just love what's going on in here. Maybe it is. Cisco. Is that your Hurley, man? We don't show our Hurleys off. Where are y'all getting those? Are they just emojis you can use, or those are just all available as emojis in the chat? I haven't spent a lot of time over there to know. I don't know. Oh, cool. Ugh. Slot machine, nice. Yeah, for sure, man. I'm sure firms will be putting out their CPI stats of who just blew their accounts on that drop, that dollar pump. I could not stop yawning right now. Very, very yawny today. If you're in the market maker sell model, you would be anticipating new lows down here. Accumulation, accumulation, smart money reversal. Look for a pullback, and then man, what a push. Dollar ripping. All right, our next 15-minute candle will set up some sort of fair value gap potential. You're going to see on Twitter today, I passed my challenge only with one trade. I'm the GOAT. Yeah, I mean, that happens every NFP, CPI, GDP, FOMC, whatever it is, interest rate. Everybody's the GOAT when their slot machine pays off. All right, we're going to see this hourly candle and 15-minute candle close will let us know how we're going to play this for the rest of the day today. So one more 15-minute candle, and then we'll make a decision about if there's any positions we want to take. So gosh, sorry, y'all. Hear the puppies coming downstairs. Hello, good friend. Hey, baby. About 9 more minutes here for this hourly candle. The 4 hours about to close. What's up, Warren Buffett? Man, there's a couple good setups. I'm trying to decide if I want to short EU or GU. If I do EU, I think I would want to target whoops, that's the wrong thing. Let's see where that puts us. It's right in there. Whoa. Don't need all that. My God. Let's get over here. I think I would want to target something like this on EU here. GU, I would probably be looking at gosh, I did the same damn thing. So there's my GU option. And my GJ option. Probably move that right there. And it may be something where I set up a couple of pending orders and see if one gets swerved, the others may not. Yeah, I think I like euro dollar setup the best here. $05.99 area. Stop up above that liquidity there, and then we'd be targeting something like this. So I'm going to go ahead and set that limit order up at 05990, stop at 06275. And TP at 05374. And see if we get an entry there. GU, I'm not I mean, I like the GU entry as well. GJ, I also kind of like. But with this weakness, this may just be a breakaway gap, and we may not even get the pullbacks, which makes me wonder, do I want to take a crack on GJ here? And take the truck. Copy this over into the Discord here real quick. Kind of like, I really do kind of like this GJ setup here. Come down lower into these fair value gaps, into this breaker. we'll see. We'll see it all plays out. I'm going to leave it open. I don't think I'm going to set any more limit orders. I think EU is the one I'm going to go with. I do like this GJ trade, but so my entry here, obviously there's a massive fair value gap, so it's in there. It's about 50% of the breaker, but it's also this, it's at the bottom. My entry's at the bottom of this inverted fair value gap here. You guys know I've been testing those inverted fair value gaps. On our other strategy on FX replay. So I'm anticipating that it's broken through that to come back up, get inside this fair value gap, retest that inverted fair value gap there, and then fall away. But this may be what's considered a breakaway gap, meaning it doesn't have to come back up there. It may want to just continue to run lower, create some structure under here. And this will be a liquidity target, internal liquidity target for a future liquidity run to continue to head lower at a future date. See you, John. I appreciate the offer. I really do. All right, here's what I'm going to do. I am going to set an alert on my entry level. Right there. And then I'm going to set an alert probably down here at this liquidity level. And wherever price gets to today, if it gets here first, I'll cancel the order. If it gets triggered in, then we'll come back, take a screenshot, and update everybody. But for now, I think that's going to be all for today, guys. So thanks for tuning in again to the 10K to $2 million funding challenge sponsored by Bespoke Funding Program. Take advantage of that Venator discount. Go pick up a challenge. Support the live stream. Click that like button before you get out of here. But you guys stay safe today. Enjoy the rest of your time. Wherever you are in the world, enjoy your day or enjoy your evening. Get some rest. We'll see you guys tomorrow morning, Friday. We'll be doing our 10K account giveaway on the live stream tomorrow morning. So stay tuned for that tomorrow. Be here for that. But appreciate you guys tuning in. All right, y'all. We'll see you in the morning. Adios.